Hi everyone, I'm Raul Harad, CEO of DeepSafe. Um, Today I wanted to just have a quick review of 2025. I know there's been a lot of people talking about what a momentous year it was, and really we can see when we look at the charts, but also not just when we talk about price, it's also in different aspects of the market. So I wanted to talk a little bit about those. The first one being regulatory milestones and policy shifts. So we've seen in the US crypto regulation come into play. So in January of 2025, we saw the new SEC crypto task force coming to work. So in January, the SEC launched a dedicated task force to create cleaner regulatory frameworks for crypto assets after the years of enforcement of heavy actions. And this has really boosted the industry confidence. Now, in July of 2025, we saw the Genius Act, where President Trump signed the first comprehensive crypto bill in US history and really bringing stable regulation and clear rules for digital asset networks. We also saw stalled broader legislation, so broader market structure reforms aimed at addressing systemic risk and exchange regulation, which faced hurdles in the Senate in the year, and it is a sign of ongoing political debates and oversights. But that said, all of these were very, very positive changes. Now, in terms of global regulatory shifts, we did see an important one in Pakistan, which launched the Crypto Council. And basically, its purpose is to coordinate at a nationwide level digital asset policy and to integrate blockchain into the financial system. We did see other jurisdictions continue to evolve their frameworks, like the UK, which launched a public consultation, and Hong Kong, which is attracting a lot of institutional exchange listings. In terms of market dynamics and price actions, Bitcoin had some historic moves. We saw it reach its all-time high levels at 120,000 US dollars. A lot of it sustained by the inflow of capital through ETFs. We did see a late sell-off in the year, Q4, really a sharp drop that erased around $1 trillion in value in the crypto market, with Bitcoin dropping below 90,000, where it currently is. In terms of Ethereum, we did see a resurgence, mostly because of the launch of ETFs. So ETH really surpassed its 2021 all-time peak, reaching around $600 billion in market cap by mid 2025. And really what this is reflecting is the institutional usage. Now, in terms of institutional adoption and infrastructure, one of the big things that we saw was the move towards ETFs. So we have inflows, massive inflows into spot Bitcoin, but also Ethereum ETFs, which became drivers of liquidity and demand throughout the year as they were approved this year. So institutional capital just shifted crypto's narrative from pure speculation to mainstream infrastructure integration. Very important what we saw in terms of security, scams, network risks. We did see an exponential rise in crypto scams in 2025. Unprecedented, really, scams in terms of how they are executed, particularly with the help of artificial intelligence. Around $17 billion worth of Bitcoin alone were stolen through scams. In terms of exchange and wallet hacks, we also saw a notable exchange breach, which Trust Wallet, the extension, which continued to underscore security risks in decentralized finance. Downturn impacts, we had, of course, the major crash event triggering cascading, as I mentioned before, totaling almost $19 billion in April. And this was highlighted by leverage risk and the sensitivity of markets to macro conditions. In the technology and protocol development, we saw upgrades to the Ethereum blockchain. So the development community completed and initiated major protocol cycles like Petra and Fusaka, which are setting the stage for future privacy and interoperability enhancements. We saw the integration with TradFi or traditional finance, so stablecoins and tokenized traditional assets, including bank-linked tokens like JP Morgan's, saw growth. They really pushed crypto into everyday payments and treasury functions. And finally, in terms of the macro and market interactions, we saw crypto in 2025 become deeply tied to macroeconomic trends, so reacting strongly to global shifts in liquidity, to changes in interest rates, and broader economic risk appetite. So, as we've discussed in the past, when risk is perceived as high, we of course have an outflow of capital from crypto assets as they are considered high risk investments. Bitcoin and major assets increased, behaved like traditional assets, not isolated digital phenomena. And this has really changed how investors view hedge strategies and portfolio exposures. Um, just in terms of the importance that this year had, of course, the crash is terrible for everyone. But one of the things that I'd like to highlight is how regulation is really becoming front and center. And that is because not only companies, but also individuals are asking for it. And I think that really what we need is clarity in the game. And so, as providers of services in blockchain, we would welcome regulation that would allow us to understand really what are the rules that we need to follow, and what are the necessary um, procedures that we have to follow in order to be compliant with the jurisdictions where we operate. Unfortunately, until that doesn't happen, we operate by being self-regulated, maintaining the strongest standard and the best practices in the market. So with that, I will leave you. I do want to say we will be having some good news soon, so stay tuned. We'll make an announcement as soon as we can. I'm sure you all know what this is about, but yeah, it's coming. So thank you all for joining me today, and of course, as always, please feel free to reach out to us through our social media or official channels, email, and let us know if there's any topics you'd like to discuss, if you have any questions, and we'll be happy to get back to you. So with that, I'll leave you. I will see you guys tomorrow, and